Hey guys, it's Jeff Trapp here with the Tax Planning Pros, and I'm so glad you decided to join me today. We've got a fantastic episode of the Jeff Trapp podcast, and I just want to let you know it is tax season, and the IRS is now accepting tax returns. A couple weeks ago, we talked about some tax legislation that was moving through the House of Representatives. It was currently sitting in the Senate, but it looks like that has stalled for now. So it doesn't look like we're getting tax cuts for 2023. And it's time to start filing those tax returns, unfortunately. So, get your books and records in order, start submitting your tax documents because we've got the S Corporation partnership deadline in just over a month on March the 15th. The individual deadline, of course, is April 15th, 2024. So today what I want to talk about is obtaining a home loan. As a self-employed individual or owning a business, it can be very, very challenging to obtain a home loan. And I know as business owners and as taxpayers, you always want to pay the least amount of tax possible. But unfortunately, in order to receive credit in this country, you have to show verifiable income. You have to show that you have income on your tax returns that is steady and consistent. So a lot of times when business owners come to us and they say, oh, I want to refinance my home, I want to acquire rental properties, I want to buy our single family residence, a personal residence, that type of thing. We have to go through a little bit of a song and dance to determine the best way forward when preparing their tax returns. So a lot of times, what we'll do is we will work with their lender to determine, what does the tax return need to show in order to qualify for the home they want to buy. Because as you know, the IRS wants you to report all of your income, but they don't care if you report all of your expenses. So some things that you're going to need when you go to apply for a home loan is, of course, proof of income. So, they'll take a look at your tax returns. The lender they'll take a look at your adjusted gross income is typically what they look at. So what is your adjusted gross income, right? So they look at W-2 income. Maybe you're getting W-2 from your business. Maybe you have a spouse getting a W-2. They look at your business income. They look at rental income. They look at interest income, dividend income. They add that all up. And if that fits within their debt to income ratios, then you're usually good to go forward with your home loan. Some other things that they will look at, they'll look at profit and loss statements for 2 years. They'll look at tax returns for 2 years. Now, a profit and loss statement, a lot of business owners don't keep great books or records, or they keep books and records retroactively. And, that's not going to qualify you for a home loan. A lot of times, what we have to do as accountants is lenders will want us to sign off on the financial statements. Well, if they're not being prepared by us, I'm not going to sign off on that, right? So, we want to make sure that you have a good record keeping system in QuickBooks. You have a good balance sheet. Make sure that there's no negative assets or negative liabilities on the balance sheet, making sure that you're not over or under reporting income and expenses, because the lenders are going to want to see that you have consistent income, and they're going to look at the last 2 years plus probably the current year of what your business is doing. And then, a lot of times you're going to have to put down a significant down payment. If you use government programs like FHA or VA, they have lower down payment requirements, but a lot of times you're going to have to put down 20%. Well, how is that going to affect the business if you take 20% of your cash, either from the business or from personal funds? And a lot of times for self-employed individuals, lenders will require 12 months. I've seen up to 24 months of cash reserves for, your mortgage payment, taxes, HOA dues, and insurance. So it's super important when you're trying to obtain a home loan, for an investment property or for your personal residence, to work with your tax strategist as well as your lender so that you can get the loan that you need. Because a lot of times when your lender requests a letter from your tax strategist or tax advisor, what they're going to want to know is that you can repay that loan. Well, us as accountants and tax strategists, we can only state the facts in those letters. And so a lot of times we refer back to the tax returns which we've prepared. A lot of times that we refer back to the profit and loss statements and balance sheets that we've prepared to state the facts for the loan. And really, it's up to the lender to decide whether you can qualify and continue to earn at that level of income. And if you've been in business for several years and we have a 10-year history of you consistently increasing your income 10% every year, it's really easy to state that our client has consistently shown an ability to increase their income by 10% every year. You know, however, that doesn't mean that they'll do it this year, but they've shown that in years past. And so, you're going to want to have a good history. Now, if you're a new business owner, it's going to be really, really tough to get a refinance or to get a home loan. Typically, they want to see that you've been in business for at least 2 years. Now, depending on the lenders that you work with, if you're a sole proprietor, Schedule C filer, um, and you end up switching to like an S Corp or a partnership, they're going to want to see that S Corp or partnership open up for at least an additional 2 years. Some lenders may not require that, and you're going to have to shop and find those lenders because they do exist and they are out there. But you're going to have to keep that in mind as you go through the home buying process and what your 5, maybe 10-year plans are for you, your business, and your real estate portfolio. So if you found this episode helpful, please share it with a business owner, share it. Down below, I'm going to give you access to our free tax playbook. And you can click on there for some more helpful tips on how to maximize your business deductions. But if you're in the market for a home or you're refinancing a home here in the near future, when the Fed decides to cut interest rates, you're going to want to keep all of these things in mind. You're also going to want to have a great credit score and a great debt to income ratio. Once again, I'm Jeff Trapp with the Tax Planning Pros, and I hope you enjoyed today's episode and look forward to seeing you again next week. Have a great one. Bye-bye.